Let's talk about conventional financing. And we're going to get a little technical. We're going to get a little bit in the weeds here because I think it's relevant. Answer the big picture question, first, and then we get into the weeds. Make sure you really understand what conventional means. So first and foremost, this is for buying a home. So residential mortgage lender, right? The mortgage market team. Somebody's buying a home, and there's essentially two types of buckets. There's either government loans like FHA, VA, USDA, things like that, like government loans, and then non-government loans. And the non-government loans, another name for it is conventional financing. So it's the non-government types of financing. So conventional financing, the most two common that you're going to hear, the big names, Fannie Mae and Freddie Mac. So those are the air quotes here, plain vanilla type mortgages. Like, hey, those are the big government agencies, and then they're going to be called, they are called the agencies, right? So Fannie Mae and Freddie Mac, they're like the mortgage gods. They basically say, like, here's what to do to where loans are normal, and they go through because they're backed by the government to some degree. At least those two agencies are. They're quasi government owned, um, and that's what makes something a conventional loan. So I would say in most cases, when you hear something on the radio or the newspaper, or you see something online about a loan type, unless it says like VA for veterans or FHA or USDA, the vast majority of the time it's going to be conventional financing. And conventional financing, you can do loans with zero down, 3%, 5%, obviously a lot more than that if you want to. Conventional loans can have a whole bunch of different things and ways to do it. You can get to what's called non-QM loans. In theory, technically they're conventional loans, but yeah, they're really kind of not, because they're not Fannie Mae and Freddie Mac loans. They're non-qualified mortgages, non-QM. So now that you kind of know that, here's what I think is important to know about conventional financing. It is kind of that plain vanilla, at least again, the air quotes, plain vanilla, because it's the non-government loans. It's the ones that you typically see scrolling across, CNBC or the news. And to what makes something a conventional loan? First and foremost, like we talked about, it's not a government loan. Here's where I think a big confusion happens. People, even mortgage professionals, um, will interchange the word conforming and conventional loans. Somebody might say, hey, it's a conforming loan or a conventional loan. Well, conventional is the big bucket. As I mentioned, it's, two buckets. Conventional is the big term. Conforming means that it's actually like a Fannie Mae, Freddie Mac, and the conforming typically alludes to the loan amount. So whenever, like right now, at the time of this taping, the conventional, or pardon me, see, I did it. The conforming loan amounts, and the loan amount set by Fannie Mae and Freddie Mac, says if the loan is below this amount, it's covered, it's good by Fannie Mae and Freddie Mac. If it goes above this dollar amount, it's considered jumbo financing. Jumbos are still conventional loans, but they're not conforming loans. Conforming loans, that means they conform to Fannie Mae or Freddie Mac. So that at the time of the taping, it's over 800 grand loan amount. It's over that. I suspect in years it'll keep going up. So when I first started the business 20 plus years ago, it was like $417,000. It stayed there for many, many, many years. And then all of a sudden it just started ratcheting up almost, it seemed, annually to make that conforming loan amount. But a conventional loan is, again, anything non-government. Conforming loans are what's under Fannie and Freddie. So don't get those confused. The plain vanilla, the conforming loans, conventional loans, conventional can be jumbo, but jumbo cannot be conforming. Does that all make sense? Hopefully it does. And here's the great news. If you've watched this entire video, good for you. The reality is, if you call the mortgage mark team, you don't need to know any of this. We're going to take good care of you and show you the options. And quite honestly, you don't give two shakes what it is, right? We're going to make sure we put you in the right program, whether it's conforming or jumbo or government. We're going to look at all the best options, present them to you, and talk to you like they really are, which is more about what do they mean to you in your pocketbook, right? In terms of closing costs and interest rate and things like that. Like, who cares what it's called? But if you do care to know, now you know, right? And knowing is half the battle. So if anything that you need or any other questions you might have, reach out to us. The Mortgage Mark team is here to help. We always appreciate it. And as always, when you think mortgage, think Mark.